Some days are down, but thank you so much, Hormaz, for joining us. And let's talk about real estate companies. Some of them have been losing today, but of course, there's been a big rise. The company that we are focusing on today is Shriram Properties. They reported a 6% rise in sales volumes and 34% rise in collections on a YY basis. The stock is doing well today. They also have multiple projects in their pipeline. We have M. Murali, the chairman and managing director of the company, joining us now to discuss the future outlook. Mr. Murali, good afternoon. Thank you so much for joining us. You have spoken about some of the delays that you saw in some of the projects that you had to commission, and also a new entry in the Pune market. Can you explain to us what happened first up with the delays and how that would impact your guidance? And second, what is happening with the Pune market? How big would that be in your overall pie?
Thank you. Good afternoon. So whatever the delays due to occupation certificate, all that has been addressed. Now all that has come in now. So we are looking towards closing the year in terms of guidelines, what has been provided with respect to the P&L. So all the occupation certificates are with us today. So the 9 months issue has been addressed now. So full year we hope to close it in line with the guidelines. Pune, there is a tremendous market potential. We see a lot of similarity between Bengaluru and Pune in terms of customer behavior, in terms of ticket size, and ideally suits us in the mid market and upper mid segment. Hence, we are aggressive on Pune. We should be launching the project. We are waiting for the final clearances. Hopefully before this month end or middle of April, we will launch the project. But we are bullish on Pune market.
You also spoke about, in the recent call that just happened, you spoke about how you lost close to 150 crore of revenue recognition potential in the quarter gone by, that is Q3. So how does that impact your internal FY24 guidance? Will you recoup all of that in Q4 or will some of it spill over to FY25?
Yeah, mostly it is done. So it was all pending for occupation certificate. Now the occupation certificate is in place. Whatever we lost in Q3 will be mostly recouped in Q4. So Q4 and also full year will look good, compensating the loss which is seen in Q3.
So you'll be able to achieve your guidance of 4.8 million square feet in terms of volumes?
Yeah, pre-sales volume, yes, we are moving closer to that. We still have 3 weeks left. Market is responding well. But one problem what Bengaluru has witnessed now recently, the water shortage, and created some kind of a negativity in the people's mind. So, barring that, we should be able to reach our full year volume in line with the guidance what has been provided. But Bengaluru, I'm sure, government is working on fixing that problem. But negative perception has been created. I'm sure everyone will together overcome that.
Could you quantify that perception in terms of how it has impacted, the pre-sales inquiries that you see, especially in the Bangalore market? And also, could you give us a sense of what is it that you're targeting in terms of FY25, your pre-sales as well as your top line? What kind of projects will reach revenue recognition?
Yeah, obviously this perception created due to water shortage. Water is most critical one, but it's difficult to predict. But there is an impact. Definitely there is an impact. I'm not worried about the water alone. See, Bangalore also has been struggling on infra for quite some time. If suddenly, and it's an election period now, if some people start talking about infra challenge along with water challenge, and we are getting into peak summer now, so then it's difficult to predict. But demand for the real estate, demand for the mid-market housing has been consistently doing very good. We are bullish on this. FY25 looking very bright. We have good projects lined up over and above the current projects which are under construction today. We have close to about another 9 projects lined up for FY25, adding to about another 7.5 million square foot new addition. So we are looking at comfortable growth in FY25.
Okay, comfortable growth. Of course, a lot of it would also depend on the execution that you would be doing, because you did indicate there are some challenges in West Bengal and Bengaluru as well when it comes to occupancy certificates or water crisis. Last question before we let you go. In terms of debt, you have a net zero target. By when will you be able to achieve it? And with the strong pipeline that you have in place, how do you plan on funding that?
I'll take the second one. Whatever the projects we are talking about, the funding has been already in place. It's mostly on JDA and DMs and some of our own project. So that's all fully on board. But having said that, as you know that we have a platform with the ASK, out of which still about another 200 crores to be deployed. We hope that will get deployed soon. We are working on some new projects. So funding for FY25 projects, I don't think is an issue. The other question on net zero debt on the current projects, hopefully it should happen 18 to 24 months time. It is all in good shape. But on the other hand, we are making good, cash generation with free cash flow generation. We hope to generate about another 250 crores of free cash flow in the next 24 months time. So all that is helping. And overall, we are bullish about demand for the next 5 years is going to be phenomenal, particularly on the mid-market segment.
Thank you so much, Mr. Murali, for giving us a sense of how business is shaping up on ground, and you've spoken about very good demand trends in the coming future. But with that, let's slip it to a short break. On the other side, we will put the spotlight on vehicle financiers, which are buzzing today in our special offering, Mid-Cap Spotlight. Stay tuned.